Welcome everybody, my name is Jerry and this is part 2 on trading futures. This is part of a series. Now if you haven't watched part 1, I highly suggest and recommend you go back and watch it. Just look in the description just below this video, you'll see the link to part 1. Really important to watch that first and then come back and watch this. And there's probably going to be another video after this, be a 3 or 4 part series in trading futures. Now, for those that watch part 1, you may be asking, where do you get all these specifications? How do you know what the contract specifications are or conditions of the contract for futures trading? So what you see before you on the screen right now is the CME group handles a lot of the specifications for trading futures. There's also ICE, but I don't normally trade to them because they have a really high subscription fee. You got to pay for data and all that nonsense. So if you have a broker that trades futures, usually your CME data is going to be included for free. Okay, if it's not, you're probably at the wrong broker. Okay, so anyway, talking about the specifications, yesterday or in part 1 we talked about oil futures, which today is April 21st, 2020. Oil futures absolutely collapsed today, so this is interesting timing that I'm doing this video. Oil future prices literally got down to like below $7. Those prices haven't been seen probably in 40 years, 30, 40, 50 years. Been a long time, okay? Way back in the 70s, maybe even earlier, since we've seen oil prices that low. So major collapse on oil crude prices worldwide. The West Texas index, I think it's called, yesterday, the day before today, was actually negative. For the first time in history, saw negative prices. So very interesting as we're in the middle of this is in the middle of the coronavirus time. So for those of you watching this in the future, yeah, the collapse of oil had a lot to do with the Saudis and the Russians not agreeing, but also the coronavirus and the fact that worldwide economies have come to a screeching halt. So anyway, for those that want to know about where do I get the specifications, where do future traders get their specifications? Well, go to CME Group. You can look that up on your favorite search engine. Basically, it's cmegroup.com. And we're looking at, in front of you right now, the QM symbol, the futures QM, and you'll see right there contract units 500 barrels. Okay, you'll see the price quotations in US dollars and cents per barrel, the trading hours that this particular futures trades. Okay, remember in part 1, for those that watch, and if you haven't, like I said, go back and watch, you'll see the minimum price fluctuation there. Sure enough, 2.5 cents, which equals $12.50 per movement. Okay, and then the actual product code or the symbol which we're looking at is QM. Now this site, CME Group, you can get specifications on just about any futures you want to trade. Again, you want to trade wheat futures, you want to trade gold, silver, platinum, E-mini S&P 500, okay, you name it, copper, whatever. Cattle, live cattle, okay, milk. I could go on and on and on. There's literally hundreds, maybe even thousands of different future products that can be traded. Okay, some of them have more liquidity or more volume than others, so you need to be aware of that, but that's a video for a different day. Okay, so in front of you is where you get your specifications. If you want to know the details of the futures contract of the specific product you're thinking about trading, go to cmegroup.com. and you'll get the specifications. Okay. Now, you're going to also notice that in this next image, you'll see this is called a calendar. Again, we're just using crude oil futures as an example, but you'll notice that the calendar here, we're on the calendar tab on their website for the oil futures product. Now, there's two different oil futures products. There's CL, which is called the big contracts, and there's QM, which is the E-mini contract. So, but they trade on the same calendar. So you'll notice here there's May contract month on the far left column is May 2020. Then after that is June, July, August, monthly. You'll notice the product code CLK20, CLM20. Those are representing different months. But the one you really want to pay attention to is the third column. It says the first trade and the last trade. That last trade, that's the last trading date. That's really important to be aware of that date, because you want to be out of your contracts. You want to close your positions on your contracts before that date, okay? So right now the June contracts are actually the contracts that are trading. At most brokers, that's the contracts that are trading. It's the June 2020. But you'll notice the last trade date is May 19th, 2020. Okay, so you really, like I talked about in part 1, you really need to know your specifications. So this is where you come to get the specifications, okay? Really, really important. That last trading day is important. You don't want to be, what you don't want to be is holding your future contracts and you hit you go beyond the last trading date. That's going to be a problem for you. Okay, you don't want to do that, especially if your positions are being held at a loss. Okay, now everybody wants to know. We finally have arrived. How much money can you make trading futures? That's what everybody wants to know, right? Okay, so in front of you is a spreadsheet. The image there on the screen is a spreadsheet. And can you make money trading futures? Well, of course you can make money trading futures. Otherwise, why do it? But the real question is, can you make a lot? Yes, you can make a lot of money trading futures. You can make a lot more money trading futures than you can stock. Now, yesterday, or I should say part 1, again, like I said, if you haven't watched it, go back and watch it, because you need to understand the risks. And need to understand that futures are not like stock. They're more complex. You need to understand the complexity of futures before you start trading it. Okay? But assuming you've watched part 1 or you're a knowledgeable futures trader, then okay, you can, you go ahead and watch what you're watching in front of you now, part 2, okay? So in front of you I have 3 different future products. In the far left-hand column, in column A, you see a symbol. There's M6E, there's QM, and there's PA. There's just 3 different products, futures products, that I chose to put up here just so we can talk about these real quick, okay? Now you'll notice the one on the second one down is QM. That's the E-mini light sweet crude. Yesterday we talked about the currently just real quick here. Every broker is going to set their own margin requirements. Okay. These margin requirements you're looking at in front of you come from TD Ameritrade, because that's normally where I trade my futures, where I place my orders and take my positions with TD Ameritrade, because they have a really good platform, the Thinkorswim platform. In another video, we're going to look at the Thinkorswim platform for those that may be interested in trading with TD Ameritrade. Great. But it applies to any broker you're at. But in any case, the margin requirements in column C says margin. You'll notice that for M6E, which is the E-micro Euro US dollar futures, look at that margin, $220. Talk about cheap. That is a very cheap margin requirement, very low margin requirement. Okay? So for those of you, I just want to say this right here, right now. For those of you that are intimidated by trading futures and you're scared to trade futures, it's too complex, you don't want to lose money, you know what? You could start with M6E, E-micro Euro US dollar futures. Those are currency futures, because the margin requirement is only $220 per contract. Okay? For anybody trading stock, you can afford $220, right? If you got $500 in let's say it's TD Ameritrade, wherever your broker is, you can trade futures, the M6E futures, because you can buy one contract. $220 is nothing. Okay? So what am I saying? If you want to get your feet wet and you're a very conservative kind of person, which is fine, I'm not knocking it, that's great, be conservative, and you don't want to lose a lot of money or you're afraid to lose money, then go ahead and start with the M6E futures contract, because the margin requirement is so low that even if you make a mistake on the trading direction, the chances of you having a significant loss are pretty low. Just for the record, again, I just want to say this is an educational video. I'm not giving you financial advice, okay? But just for the record, yes, futures trading in theory is possible to have unlimited losses. That is true. You could, in theory, have unlimited losses. But the likelihood of having unlimited losses in M6E is remote. It's just probably not going to happen, okay? It could happen, but it probably won't. Okay, so again, if you want to get your feet wet in futures trading and you don't want, look at QM, the next line down, $3,520 for one contract for the margin requirement. That's expensive, right? For most people, that's a lot of money. The next one down below that, Palladium, which is a pretty rare metal, look at that margin requirement. How ridiculous is that? $63,000 just to participate in one contract. Everybody, I just want to tell you, I don't trade Palladium. Because I don't just toss around $63,000, okay? So I'm just putting these three different futures products up on the screen here so that you can see that you can trade something as small as an E-micro currency like M6E at $220 margin, and you get to participate in the futures market with very limited risk. Okay, it's such a small risk. It's almost a no-brainer to get your feet wet there. If you're, like I said, if you're conservative. Okay? So for those of you that want to take advantage of the current catastrophic situation of the oil futures market, well, maybe you want to trade QM if you got, $4,000 or $5,000 laying around, and you can probably handle that margin requirement on one contract for $3,520. Let me just give you something that I do. This is what I tend to do. If I tend to have twice as much money in cash and or assets available if I'm going to up and above what the margin requirement is. If I'm trading one contract of E-mini light sweet crude at $3,520, well, I want to make sure that I have about $7,000 minimum available. I want to have double the amount of margin. Now, I'm not telling you that's what you should do. I'm just saying that's what I do. Okay. Okay, let's take a look at the next thing. You'll notice on the screen now that on the second row, QM for E-mini light sweet crude, if you go to the right all the way to columns K, L, M, and N, you'll notice I have kind of highlighted in light blue there. Now, today being April 21st, 2020, light sweet crude oil futures crashed, like I mentioned earlier. They went from $21.30. You'll notice in column N, this is just my spreadsheet. I have a start price. S price means start price. So at the beginning of the day when it opened up at $21.30. And then in column M, where it says E price, the price came all the way down to $6.67.5. That's as low as it got today. That's a huge movement. So could you make money? You doggone right you can make money. Now yesterday, for those that are savvy traders, yesterday the West Texas Index crashed and went negative. So pretty much a no-brainer that today's prices were going to crash on the light sweet crude market, and it did. So you'll notice in column J it says quantity. I have a -1 there. That means that if I had shorted one contract, -1 means you short the contract instead of long. Okay. Short means you sell something. Long means you bought something. For those who have never shorted anything, that may sound like an unusual concept. But in the futures market, you can sell something you literally don't have. That's what shorting is. Okay. For those of you that ever shorted stock, you understand the concept. But basically, in the futures market, you can short something or sell something you don't have. So the quantity -1 would mean you're selling this contract short, one contract. If you happen to sell it at $21.30 and then buy back in at $6.67.5, today you would have made $7,312.50 in one day. Now, that doesn't normally happen because today was a pretty extraordinary day, but I've seen days where $2,000 or $3,000 can be had. $500, $750, $1,000, $2,000. So can you make a lot of money in trading futures? Oh yeah, you can make a lot of money. But let's say you went the wrong way and you went long. Well, you'd be $7,312 in the hole. Well, okay, I don't know how much you'd be in the hole. It depends on where you got in or out. But my point is, you could lose just as much as you make. Okay, you can lose a lot of money in futures trading. Trust me, I know I've done it. See, at least I'm honest. A lot of people don't talk about how they lose money and make money. Most people only want to talk about how they make money. No, I'm going to be honest. I've lost money in futures trading. It happens. And if you trade futures long enough, you will lose money. It's part of being a trader. But what we don't do is we don't break down emotionally and start freaking out, right? We mitigate our losses, we move forward, and we always work at making more money than we lose. That's the goal. So in the year 2020 or 2021, your goal should be to make more money than you lost, right? Okay, so anyway, I just wanted to talk about, because I know everybody wants to know, can you make money at futures trading? How much can you make? Yeah, you can make a lot of money in futures trading. You can lose a lot of money in futures trading, okay? So again, just real quick, if you're concerned about getting into futures trading, then start small. Start with M6E. At TD Ameritrade, at least in the United States, I don't know about Europe. I don't know what the rules are there in Europe, but here in the United States, you can open up a TD Ameritrade account with zero money. You don't need any money. You can open up an account. You can fund the account with any kind of money you want. Okay? The rules may change now. They may have changed recently. I don't really know, but assuming they haven't changed, if you want to put in $500 in a TD Ameritrade account, okay, or $1,000 or $2,000, whatever, small amount of money, you could be trading E-micro, Euro, USD futures pretty soon. Once your account is set up and it's funded, and there you got small commitment, and you're learning trading, and you're not at big risk. You're at small risk. Okay. Okay. So today I just wanted to share the math. Okay. For anybody that's interested in the spreadsheet, just let me know. I'll put it up maybe on the Google Drive or whatever, and you can go download the spreadsheet yourself. So maybe I'll put it up there anyway and put a link in the description so you can download the spreadsheet. Okay, very, very convenient, so you can figure out what you're going to trade, how much your margin requirements are going to be, and you can put in your start prices and end prices, and it figures it all out for you. Okay, just make sure you check your specifications. Go to CME Group because specifications change. But more importantly than anything else, check your broker and find out what your margin requirements are. Okay. In the next video, in part 3, we're going to look specifically at TD Ameritrade, the platform I use. I'm going to show you where you check the margin requirement for that specific broker, okay? And I might even do a trade because I'm going to do a trade pretty soon here. You guessed it, on M6E, because I'm going to do a very low risk trade, and you all can participate and watch me make this trade, okay? And at least place the trade and take on a position. Okay, I may not close it and take the profit because that may not happen on the same day, but anyway, we'll do that probably in part 3, and you can watch how I actually place an order with them and so on and so forth, okay? So today, I really hope you enjoyed the video. Listen, if you haven't subscribed to our YouTube channel, go ahead and click the subscribe button. Make sure you click the notification bell so that you can get notified when I put out the videos, okay? And if you don't mind, please give me a thumbs up. It really helps the channel, and we'll see you all again probably tomorrow or soon enough for part 3. Okay, talk to you all again real soon. Bye-bye.